The thing about Bitcoin is simple. It never crashes quietly. When it falls, it drags the whole market's attention with it, like a spotlight dropping from the ceiling and shattering on the floor. And this time, the sound was loud. Tonight, we're breaking down why Bitcoin crashed, and what that fall is whispering about the market's future. Bitcoin didn't fall because of one headline. It fell because pressure built up in the dark, and then everything snapped at once. Here's what stacked up. Over-leveraged traders pushed Bitcoin too high too fast. Liquidations hit, wiping out billions in minutes. ETF inflows slowed, removing the biggest new source of demand. Miners sold more than usual, trying to stay afloat after the halving. And the broader market was already shaky. Risk assets were on edge. Bitcoin didn't crash because of weakness. It crashed because the market was too confident, too crowded, too leveraged. When everyone leans in the same direction, it doesn't take much to tip the room. Most Bitcoin crashes feel like panic. This one felt like exhaustion. Investors weren't terrified, man. They were tired. Tired of chasing highs. Tired of waiting for the next catalyst. Tired of pretending the market could go straight up forever. This wasn't fear. It was a reset. A reminder that even the strongest assets need to breathe. Here's the part most people miss. Bitcoin is the market's truth serum. When Bitcoin cracks, it reveals what the rest of the market is hiding. And right now it's signaling three things. A, liquidity is tightening. Money isn't flowing as freely. Risk assets are being tested. The easy gains are gone. B, speculation is cooling. The froth is burning off. The gamblers are getting washed out. The tourists are leaving the casino. C, the next move will be cleaner. When leverage dies, real demand gets a chance to show itself. The next rally, if it comes, will be built on stronger hands. Bitcoin isn't signaling the end. It's signaling a transition. Every major Bitcoin cycle has the same rhythm. A surge, a peak, a violent correction, a period of silence, and then the real move begins. Crashes don't kill Bitcoin. They give long-term investors the one thing they never get during a rally: time, space, and clarity. Bitcoin didn't crash because it's broken. It crashed because the market needed a reminder. Nothing goes up forever. But every cycle has a moment where fear turns into opportunity, and opportunity turns into momentum. This crash wasn't the end of the story. It was the chapter break. What comes next will tell us everything.